I think the biggest challenge that comes for especially equity REITs and specifically more so in the multifamily REIT space is, what is the market demanding? So what sort of services are REITs now required to provide? Because what was considered customary in a particular geography 15, 20 years ago, that has changed. So keeping up with these market changes, keeping up with what these services now REITs have to provide to their tenants is crucial.
Joining me today is Mary Selvanadin, Senior Manager, Partnership Tax Solutions with Grant Thornton Advisors LLC. Mary, thanks so much for joining us today.
Absolutely. Happy to be here, Matt.
Now, REITs are subject to a myriad of rules, including quarterly asset test requirements and yearly distribution and income test requirements. What are your suggestions for best practices to ensure compliance with those rules?
I think the first thing is just, understanding what the business changes are. And so if you're in-house at a client site, for instance, if you're the in-house tax team, talking to your internal investments team, talking with your internal accounting team, understanding what investments they are looking to make so that in the event there are changes or things have to be structured differently, you have the time to do that ahead of time. So for instance, the income test is an annual test, but I always tell all my clients, let's just do it quarterly. Let's make sure that at year end, we don't have any surprises. And for the distribution requirements, I think it's just making sure you have a robust projection of taxable income process, making sure you are truly thinking about all the different activity that has happened, how this impacts from a tax perspective, so that at year end you have the right numbers and you can make sure that your distributions are also met.
And one of the more technical rules faced by equity REITs in complying with the annual gross income tests is that most of their income be from rents from real property, which is a defined term, of course. What issues can affect this type of income, and how can REITs ensure that their rental income satisfies those income tests?
Absolutely. I think the biggest challenge that comes for especially equity REITs and specifically more so in the multifamily REIT space is, what is the market demanding? So what sort of services are REITs now required to provide? Because what was considered customary in a particular geography 15, 20 years ago, that has changed. So keeping up with these market changes, keeping up with what these services now REITs have to provide to their tenants is crucial. And also really understanding what is truly every source of income that a REIT has. Sometimes when I look at trial balances, it will just say miscellaneous income. But understanding what is truly in that miscellaneous income is crucial. And so I think that's really the primary challenge. And by understanding what those services and what the changes dictated by the market are, it helps you plan where maybe certain things have to be provided through a TRS entity, or certain services need to be provided by an independent contractor. So keeping up with markets in the local markets will be a very crucial in making sure that you are staying up to date with what the income test requirements are as well.
And what suggestions do you have for building a strong in-house tax function and also working effectively with your outside advisors?
I'll tackle the working with outside advisors first, since I'm in that role as well. The first thing I always tell clients is communication. If something's going on, you're thinking of making a change, just pick up the phone, call us. Talk to your tax advisors to see what impact something could have. And also, once you get into the year-end process of preparing tax returns, I'm a firm believer in timelines. This way, it avoids confusion on who's doing what when. Clients fully understand when there is things due to their tax providers, and tax service providers also understand when things are due to the client. So I think that creates accountability as well. And with regards to creating an in-house tax function, the first thing that comes to mind is really understanding what the in-house capabilities and expertise is. So if you have a team in-house that is very strong with federal items, then maybe stateside is where you need more help, and outside preparer makes more sense. So I think understanding the capabilities and also making sure that if you are the VP of tax or you are the SVP of tax, that you're also identifying good CPE opportunities for your team as well so that they can keep up with all the different rule changes.